Let me share my screen. So my business is Own Home Loans. I'm a mortgage broker, and we do, I suppose, everything else that you'd expect from a mortgage broker. Hopefully, making the process as easy as possible and doing the paperwork and finding the right deal. But certainly, there's thousands of mortgage brokers who do that. So what we want to do is deliver a bit more and, well, hopefully a lot more for our clients to get them into a better financial position. So we always talk about 3 different services or products: and own your home, own your life, and own your future. And we find that most people fit into one of these categories. Own your home is all about how can we show you how to pay off your home sooner, and so you can own your own home as a big focus. How can you own your life? And that's about getting rid of smaller consumer debt. So there's a lot of people who are in a lot of trouble with too many credit cards or payday lenders or whatever it might be. So we want to give some structure around that and get people into a better financial position. And own your future. And that's about how do we build wealth? How do we get more than one property? So that the structure, someone like Nelly will give the advice and say if they should do it, and we'll show them how they can do it. So that's kind of what we're all about. So I just wanted to go through some questions that we get asked a lot. So these are sort of common things that come up. And the first one, because we sort of pitch around it, is how do I pay off my home loan? And there are plenty of ways to pay off a home loan, lots of different little tricks, but this is one that we talk about a lot. And it's all about structuring your bank accounts. It's all about putting your money in the right bucket, and making sure that you're leaving your money into an offset account for as long as possible so that you can pay off your loan as soon as possible. So, an offset account will sit next to your home loan as a transaction account, and just think of it as a savings account that saves you interest rather than earning interest. And that's probably usually a much more powerful thing if you've got a home loan, especially when you compare it to just a normal bank account earning interest. So, but what we want to do is we want to make people's bank accounts work, have different accounts for different things. Savings account, spending, bills account. A lot of people have a kids account, a holiday fund, or whatever it might be. So, but having this structure and having something to work with really helps most of our clients know where they're at, and coming off what Tracy was saying, just having that plan and it's just a great starting point. So this is something we go through a lot, and we find it really helps people. So there's a lot of nuance to it, which is specific to people's own needs, but they just know that we're all about, I suppose, structuring people's finances in the right way. And this is our starting point for helping people pay off their home loan as soon as we can. This one is all about equity, and so many people say, well, what's equity and how do we actually, how do I get from my house now to an investment portfolio? So we like to go through, as you can see, a few little diagrams, like the one we just went through. And this one, just to graphically just show someone, how they can, how equity works and how you can multiply your properties as long as you're at the starting point is having some equity in your first. And so a first step, get some equity in a property, and the next step, if they want to, and if it's the right strategy to go down, how do we use that? So that's all about saying, okay, well, if you've got a house value, and in this example, 750,000 minus off your debt, how much available equity have we got to go into a deposit on the next, or in this example, potentially 2 more. So again, this is going to be different for everyone, but and we'll certainly do these specifically for different clients to show them in their circumstances how they can move from one property to multiple, and in what time frame that's going to take. So some people are much more aggressive than others. So we certainly go through the exercise to try and see how quickly we can get someone to their goals, if that's indeed what they want to do. This is a massive one at the moment, and this is all about should we fix? I get asked this question many, many times a day. As you can see, rates are crazy low. That's a very technical finance term, so sorry about the jargon, but crazy low is what they are. At 1.79% for a 2-year fixed rate. I don't talk about rates too much. We're more about the structure, but the starting point, a powerful way to pay off a loan is to start with a cheap rate. And And when you're talking about rates like this, it is insane. So what we want to do though is make sure that it's not false economy. So if you fix your entire loan, great on one side, you get a cheap rate, not so great on the other side that you usually can't make extra payments onto a fixed rate loan. So if you're in a situation where you're not able to pay down this debt, that means you're paying 1.79%, even though that's a really cheap rate on money that you don't have to be paying effectively any interest on if you could actually pay that down. So we need to look at and do a bit of forecasting and say, okay, how much are we likely to pay off in the next, in this example, 2 years, and make sure there's enough variable which allows the flexibility to actually pay down your rate in order to effectively use your loan. Because once a loan is fixed, it means exactly that. The rate can't move, fixed rate, but usually fixed repayments too. So we want to make sure we've got the best of both worlds wherever we can. Because if you do break it, there can be significant penalties to break a fixed rate loan. So we don't want to do that. And you are having a bet with a bank, and banks don't like to lose bets. So this is probably more relevant pre-COVID, and it will become more relevant post-COVID because at the moment the government is propping up the fixed rate market, which means they're artificially low. So it's pretty unlikely that you're going to lose on a fixed rate loan at the moment. However, in the general sort of usual times, banks will win that bet 75% of the time, and you'll end up paying more with a fixed rate loan. Generally, that doesn't apply right now because, as I said, they're artificially low, but we're going to really look carefully at if that's the right strategy going forward. It's a guaranteed right for me. So 100% money back guarantee for the bank. So they basically will make sure that they're covered. A guarantee is usually with a family member. There are some risks for a family to guarantee a loan. But it's an awesome way for a young person to get into a property when they're young without having to pay mortgage insurance. So if a parent's got a bit of equity in a property, they can use some of that equity to help their kid get into a loan sooner and much, much cheaper. So I won't go into the detail now because I'll certainly run out of time because it is a big topic, but it's certainly something I get asked a lot, and it's something that can really, really help if it's the right thing to do. And I make sure that everyone knows the situation, the guarantor, the applicant, everyone knows what their rights and responsibilities are because you have to do it right. I just wanted to finish. I've got a few pre-approval tips. A lot of people are out there getting pre-approved in this crazy hot market at the moment. And just know that not all pre-approvals are made equal. If you're looking to get a property, sometimes a bank will give a pre-approval, which really is just goes through a computer system. Person hasn't actually looked at it. It doesn't really, it's not worth the paper it's written on in most cases. So you want someone who will actually review your pre-approval properly. Check your statements first. Look, banks don't really like to see a lot of sports bet transactions and, other, lots of cash withdrawals and whatever. So have a look at your statements if you're going to go for a pre-approval and make sure we can work through that together. Be organised because you've got to be quick in a market like this. You've got to get a pre-approval done nice and quickly. Try not to lose your job. That's always a good one. And that's more about, don't let your financial situation erode between getting a pre-approval and buying a house. I'm actually working with a couple at the moment who got a pre-approval and she's moved jobs. She went directly to a bank to get it. Now we're having to scramble to get her another approval because the approval she's got doesn't actually hold up because she's changed her job. So that's a massive issue that some people go through. Just because you get a pre-approval doesn't mean it's going to stick no matter what your situation is. Can hurt your credit file just a little. So be careful about getting too many pre-approvals done with too many lenders. It is marginal, but it is an issue. Check your credit file. We can make sure that we have a look at a credit file to make sure that when a bank looks at it, we're going to address any issues on that credit file if need be. And set a budget for a comfortable repayment. And this is the most important one that we go through with the client. It's easy enough to shackle together a home loan. That's a snapshot in time. What's important is that repayment, that grind month in, month out. If that's not a comfortable figure for you, and with Tracy touched on before, you've got to reassess how much you're going to buy for because we don't want people to go to struggle month in, month out to pay off a mortgage. We want people to be comfortable with it, pay it off nice and quickly. And a few little things. Market is absolutely hot. Banks are really, really slow at the moment. So, you know, and that's to do with first home buyers. Investors are back because, you know, rates are so low. So if you want to do something, you've got to get organised and do it early. Fixed rates are starting to move around a little bit. So if you think about fixed rates, it's probably a time to have a look at it. And the best interest duty, I'll finish on this. This is something that brokers are legally obliged to act in our customers' best interests. Banks are not held to that standard. Yeah, if you work for a bank, you've got to act in the bank's best interest because that's what you do. I've worked in the banks and I certainly know that, but with a mortgage broker, we are legally obliged to act in our customers' best interest, which is an awesome thing. So we can, you know, put our hand on the heart and say that we're doing that for our customers. So that's me. As I said at the start, all about owning your home, life, and future. So, I know I've run out over time, so I do apologise, Anna, for doing that.
You can have an extra minute or two because we have got time if you need.
Oh, well, if anyone's got, I'm at the end, so if anyone's got any questions, I'd love to answer if you have any.
Beautiful. Thank you, Rory. Lots and lots of info, both between you and Nellie. Wow, we're flooded with information this morning and great information.